Homeowners across San Diego County are seeing their fire insurance rates rise dramatically. In some cases, people are getting dropped from their plans altogether. In this Your Stories report, News 8's Shannon Handy spoke to a Descanso man dealing with sticker shock after seeing his estimate this year. He emailed us for help. She looks into the problem and why it's happening.
Marvin Evans has lived in this Descanso home for 12 years, and this is the most he's ever had to pay for homeowners insurance. Between 2020 and 2021, his premium went up by 260%. What was your initial reaction?
Horror.
Marvin Evans did not hold back when discussing how much more he'll be paying for homeowners insurance this year.
I know it's true that they have to raise rates, but raising rates 2.5 times is exorbitant. It went from $1,744 on my California Fair plan to about $4,500.
The California Fair Plan is a state-run insurance program designed as a last resort for those who can't get coverage elsewhere. Despite no recent major fires in his area, Evans is one of hundreds of thousands of Californians dropped from traditional insurance companies due to a rise in fires statewide. California Fair Plan rates are based on what fire protection class your home falls under. The higher the number, the higher the risk. In 2016, Evans received this letter from San Diego County Fire, letting him know his class went from a 9 to a 3, in part because a fire station was built closer to his home. That made his premium drop. But last month, he received this letter from the California Fair Plan saying his class went back to a 9 with no explanation as to why.
I asked my agent, and he said, anybody on a well is going to be a 9.
Turns out Evans isn't alone.
The rates are going to continue to go up.
Aaron Farmer is an agent with Jump Insurance Services. He says as fires get worse and homeowners continue getting dropped from their plans, the California Fair Plan is taking on more policies and in turn more risk.
They're increasing their exposure tremendously. And I think they realize that they have got to charge the appropriate rate for the risk.
Aside from increased fire risk, Farmer says another contributing factor to higher rates has to do with the housing market.
Based on the values of homes today with where the market is, many people have much more equity than they've ever had.
So what, if anything, can be done? For starters, Farmer suggests working with an agent familiar with the California Fair Plan, saying misinformation can cost you big time.
An agent can quote something today with the California Fair Plan and not put in exactly the correct information, which may give an artificially low premium to the homeowner. And once it's validated later, meaning they check to see that there isn't a fire hydrant right outside and a fire department is not within 5 miles, they're going to adjust the rate.
As for Evans, he plans on writing a letter to his state representatives about the issue. Beyond that, he just wants others to be aware so they're prepared for the sticker shock, unlike he was.
There are plenty of people around who are living paycheck to paycheck. The situation is very dire.
Shannon Handy, News 8.